So this is not a random order block video. This is very detailed video about order blocks. The topics we will be covering today is types of order block, how to refine order blocks, using liquidity to refine order blocks on lower time frame, premium and discount pricing, hidden order blocks, which order block to choose inside a bar order blocks. So even if you know what is order block, please watch this video till end. You will get some new knowledge about order blocks. So as we can see, there are range, pivot, candle, fractal. So you don't need to memorize everything. I will explain how to easily mark the perfect order block without even looking at this kind of stuff, but you need to understand what are the different types of order block. Okay, the first one is range order block, second one is pivot, and third one is candle, and fourth one is fractal. So as we can see, what is a range order block? So in this range order block, we can see there are multiple candles over here which broke this structure. Okay, in pivot there are two candles which broke the structure. In single candlestick there is one candle which broke the structure. And in fractal we can see there is wick which broke the structure. Okay, but in fractal we will be only using fractal in 5 minute and above time frames. How we refine from range to fractal. Okay, so what we will do is, if we start to mark the range order block, what we will do is we will mark only the green candle where the move started to go up. Magnification of this zone. This is just a refined version of this zone. Okay, so what we have marked is the green candle which broke the structure, like the where the upside move started. So this is the upside move which broke the structure. And now in candle, this is the upside move with a single candlestick which broke the structure. And fractal is just a wick. Okay, so now let's understand this on Euro USD. Let's mark this zone. So what we are saying is break of structure over here. Okay, higher time frame pivot order block is range on lower time frame. So what do you mean by higher time frame pivot order block is lower time frame range order block? Okay, so as you can see, this is the single candlestick. Now we will go to 1 hour. We can see there is some kind of range, and if we mark this zone which is pivot. Okay, so what we are doing is we are marking from this range to, we are referring from this range to pivot. Okay, so where the move started to fall down. And now this is the single candlestick, and this is the imbalance over here. So as we can see, we are marking the perfect order block. So even if you use 50% of the range, it will be exactly same as pivot order block. Very little bit difference in pivot and range order block, because most of the times like just a 1 to 2 pips of difference most of the times where we refine the order block. Now I will give you another perspective to draw this exactly the same zone without looking at multiple time frames. Okay, so in this zone I will just remove all of this. So as we can see, in 5 minutes we can see, so this is my definition. Order block is not a single candlestick. Order block is a move that took out the liquidity. Okay, so to understand proper marking order block, we need to understand where the move which took out the liquidity. Okay, so which is the move which took out the liquidity. So this is the red candlesticks which took out these lows. Okay, where the liquidity sweep happened. So this is the move which took out the liquidity. Now we need to mark the candle which broke this zone. Okay, which broke this zone. So as we can see, this is the candle which broke this zone. Okay, we will only mark this zone. And now we can see how precise is this. Okay, and very easy without looking at multiple time frames and confusing yourself. So this is how you mark perfect order block without even looking at other time frame. Okay, this will be our risk entry 1:36. I don't like to flex RRs because at the end of the day, making money is our goal. We don't need to flex RR. Okay, most of the Instagram traders are flexing. I've caught 1:7, 1:15, 1:56. So if we go to lower time frame, now we have marked the perfect order block. We just need to, if you are taking confirmation entry, we just need to make sure where is the change of character. Okay, so as we can see, price is going to downside. Okay, now this is the high which was broken, like it's equal highs making liquidity. And now, so as we mark again lower time frame structures, again structure, so we are marking which is the clearest structure, like which clearly broke this zone. Okay, which clearly broke this zone. So this is the candle which broke the zone. Now as we go to, so how we'll mark this perfect order block again. So first what we will do is we will mark the pivot range. Okay, so what is this? This is the pivot one. This is the range. Okay, this is also similar to pivot. Now what we will do is we will mark the single candlestick. Again, this is the, now we will use the liquidity model. Now we can see this red candle took out the liquidity and broke the structure. Okay, so this is the candle which broke the structure. Now we can see, so now price is coming at the fractal one. Like most of the time price will not come at the fractals, so we need to make sure we are marking the order block on the right spot. Okay, so our entry will be here. And many people ask me how to choose confirmation entry over risk entry, which entry to choose. If you don't know what is confirmation entry is something like if you draw 1 hour point of interest, like for example, if price is going up to the upside and broke the structure, so this is 1 hour order block, and when next time if price is creating liquidity over here and comes to this zone, what we will do is we will not enter directly, we will look for lower time frame structure like 5 minutes especially. What we will do is look for lower time frame structure and wait for change of character. So this is the confirmation entry. So you will enter over here and stop loss will be over here. And so what is the benefit of confirmation entry? Confirmation entry is like you are not risking your capital directly on the trade, because you are making sure that it's going in your direction. But in risk entry is something like you're directly risking your trade. So but now many people ask me, now how we will know that which order block to choose, like which entry to choose, confirmation entry or risk entry. So what we need to do is we need to check if this is a zone you have marked, the point of interest you have marked is bigger or smaller. Okay, so if it's smaller than 2 or 3 pips, so if you count the pips over here, it's like 3 pips. Okay, so if the zone is like more than 5 pips, you need to make sure you are using confirmation entry. So for example, now this zone was less than 3 pips. Okay, if your zone is less than 5 pips, you are doing risk entry, but your zone is more than 5 pips, you will be taking confirmation entry. This is how simple it is. And now that your target will be next demand zone. So if you have entered on this trade, how to manage risk? You will go break even when the high breaks. Okay, you will go break even when the high breaks. Now this high is broken, you will put your stop loss off from here to here. Now this high is broken, your stop loss will be here. Now this high is broken, your stop loss will be here. Now this high is broken, your stop loss will be here. Now this high is broken, your stop loss will be here. So that's how you manage a proper trade. Okay, so now this high is broken, your stop loss will be here. Now this high is broken, your stop loss will be here. Now this high will be broken, your stop loss will be here. And now finally you can book your take profit from this demand zone. Okay, now you can book profit over from this demand zone. So this is like 1:48. Most of the time what I do is I close 50% my position over here and I keep my 50% position running. Okay, so that's how it is done. So again, what is inside bar candles? Inside bar candle is just a lower time frame, range on lower time frame. Okay, continuation demand on higher time frame, wicks. So what is inside bar? For example, now as we can now we are using this inside bar indicator. So as we can see, this is the inside bar candle. Okay, so what is this doing? This is just waiting, like price is closing above the zone, like above the structure, and then again breaking the structure. So what is this? This is just similar to order block which broke the structure. Okay, to mark the order block, we need to make sure that order block is making some kind of structure break or something like that. Again, what is sell to buy wicks? If we go to higher time frame, this is sell to buy wicks. So what is sell to buy wicks? It's just a continuation trend. There is an order block in this wick, but as we are using higher time frame, we can't see the order block. Okay, if you go to lower time frame, you will start to see order block over here. So again, in this we can, so what we have learned is, first we will draw the range. So as we are using range, most times it will hit the 50% of the range. So we will understand why this zone was created. We will mark the order block, we will mark the liquidity and the move which took out this liquidity. So from here, if you go to 30 minute, we'll mark the move which took out the liquidity. Okay, so again we will refine it from here. Again, what we will do is the move which took out the liquidity, now we are refining it to here, because as we can see, these highs were broken from this candle. Okay, So this move also took out the liquidity, and now this will be our perfect order block for entry. And we can see how precise is this. Price came here and started to fall down. So we can go to much lower time frame and mark the perfect order block. Like we can refine in lower time frame, but this is a chart from August. We can't go to the 1 minute, so that's why I'm not. This is nice move to the downside. Okay, so sell to buy continuation wicks. So we can directly use this as for order block, but we need to make sure we are refining from we are refining to the lower time frame. Okay, so now what is large wicks? Large wicks is demand zone on higher time frame. Large wicks is demand zone on higher time frame. Okay, for example, if you go to weekly, this structure. Okay, so wicks contain demand on lower time frame. Okay, wicks contain demand on lower time frame. So this is higher time frame wick. If you go to daily, we can see there is some kind of order block over here. So we can see there is some kind of order block over here. If you go to 4 hour, so there is imbalance over here. So that's how we will refine the zone. Okay, so in this video I have covered mostly everything, like different types of order block, which order block to choose, and everything in much detail. So I want you to subscribe to this channel and share this video to your friends who are still they don't know which order block to choose and how to choose the perfect order block. So there are many confluences which matters in marking the perfect order block. The first one is market structure, second is premium discount pricing, and third is liquidity sweep and mitigation. Okay, let's say this one. So in this scenario, we can see market structure, price is going to the upside. Okay, this is the high, this is the low, price is going to the upside. Second is premium discount. So what is premium discount? If you don't know what premium discount is so what you have to do is go to Fib retracement and mark only 1, 0, 0.5. So this will give us a range. So obviously if you are smart enough, you don't need to mark this one. Okay, this is just for educational purpose. So what we need to do is mark the 50%. So what is the logic behind premium discount is like for example, if you are going for shopping, Black Friday sale. So if you're buying something, you will wait for the discount, right? So why will anyone buy this price at 1.200 if they're getting discount of 1800? Okay, so if your price is going to the upside, why you will buy at this point if you know that price will be coming to the discount in some days? Okay, so that's the logic behind the premium discount. And why you will sell over here if you can sell this at much higher price. Okay, so that's the logic behind premium and discount pricing. So you will buy in discount and you will sell in premium price. Okay, so that's the logic. Now let's see. Now we have marked the premium discount also. We have also marked the market structure. Now we will mark the liquidity sweep. Okay, for I will remove this zone, like the premium discount, and now we will see where was the liquidity sweep. We can see this was the liquidity sweep over here. So what we will do is mark this 4-hour order block and go to the 1 minute. Now we have marked the liquidity sweep over here. Now what we will do is we will mark which order block broke the structure. Okay, so in this case, so if you mark this zone, and now we will see which zone broke the structure. Okay, so this is the zone which broke the structure over here. Okay, now what we will do is we'll go to lower time frame and we'll see which zone took out the liquidity. I've already explained this earlier. Okay, which zone? So it's the same. We are using liquidity sweep mitigation. So price mitigate over here, and we will mark this zone, and we will see if which entry to take. So in this video, I have explained everything about which order block to mark and which order block to choose in very great detail. And I have also given you a model where you can easily find order blocks without even looking at multiple time frames. You can directly go to 1 minute or 5 minutes and start looking for order blocks for intraday trading. So if you want to know more about smart money in detail, like why order block forms, what is liquidity, how to spot liquidity very easily, which order block to choose, and everything, so you can join our course. The price of course is $300 right now, US dollars. You will get access to our Discord server. And if you like the video, please like and subscribe to the channel.